Ray Dalio, the famous hedge fund manager and also happens to be NIO investor and China bull, has posted a note or an article on LinkedIn where he talks about, well, what he thinks is going on with China and the capital markets. And so in this video I will read it to you and I will also add a little bit of my own commentary around it. And so let's go. Who's Ray Dalio? Well, he's an American investor. He runs the world's largest hedge fund, Bridgewater Associates, and he also happens to be the 79th wealthiest person in the world. And he also has some special views on China. As I mentioned, he is a China bull. And well, he mentioned that he thinks that China is managing the COVID pandemic pretty well and thereby has some advantages on the world economy stage. And he also argues that actually he thinks that the Chinese economy's fundamentals are strong and the assets are relatively attractively priced, and that he thinks that too many bonds and stocks are actually being underweight in global portfolios, and so that he thinks there might be a shift maybe from the US or other assets going into China later on. Well, now so far his call wasn't quite good in the case that, well, in the last couple of weeks, obviously, possibly also his assets have been falling dramatically. I don't know exactly what kind of holdings he has, other than that he has invested, I think, roughly around $40 million of investment in NIO, and well, back then when he invested in 2020. So you surely need to read his opinion now also from the view that he certainly has an interest that the companies are doing well and also are being treated well by the stock markets. And obviously you can see there that he is rather positive on China in general. So in his post, Understanding China's Most Recent Moves in the Capital Markets, he goes on and, well, he picks up two issues. First, the Didi issue regarding the controls and the data usage, and the second one, which I've also mentioned before, is China's education companies being converted in non-profits. And he basically makes a statement that this has been misinterpreted. And, well, mostly he says, here's an important point. He mentions that he has actually been going to China since 36 years ago, and that not all of the people who are investing in China actually have this kind of strong bonds. Also, most of the investors possibly don't understand a lot about the Chinese government, how it's working. They don't have a close tie. Most of them do not have direct contact with policymakers. And so he believes that those people tend to interpret this, that China is actually quite anti-capitalist, and now showing kind of its true side here. He's going on and explaining what's happened to Didi. In his views, he's mentioned that that regulators and policymakers have told them to not go ahead with the listing and understandably want to deal with the data privacy issues. So that's actually something which I have also explained before in previous videos, what I personally also think has happened. And in the case of the educational companies, he mentioned that the government wants to reduce the educational inequality and the financial burden on those who are desperate to have their children and the services that they can't afford, but making them broadly available. So I have to say I share these views in terms of the explanation behind what are actually the fundamentals and the reasons for each of these crackdowns that we've seen with Didi as well as for the educational stocks. Yet he goes on and mentions, like, once again, he's seen in the past with certain issues, for instance, here in the retail investor bubble, and also he mentions the Chinese currency plunge in 2015 and 16, that also back then those kind of regulations or happenings have been kind of misinterpreted by many of the observers. So the basic conflict that he sees here is the argument that on the one hand side, there are those who interpret all of these moves as anti-capitalistic and, very communist moves and so on. And on the other hand, his experience of actually that the Chinese government is actually tending and keeps going in the direction of a capitalistic society and also a market economy. And he mentions also that if we see things in perspective, that also regulations like this are actually even happening also in other capitalistic societies. The way that he understands China is that China is a state capitalist system, which means that the state runs capitalism to serve the interest of most people, and that policymakers won't let the sensitivities of those in the capital markets and rich capitalists stand in the way of doing what they believe is best for most people of the country. So from my personal perspective, and I'm born and raised in Germany, coming to China, I have the feeling that, well, I've almost never seen such a capitalistic country, to be honest. Also doing business with Chinese, in contrast to doing business with Germans, it's really kindergarten in Germany. The Chinese are very much very business savvy. It's all about money, and it's really tough business. It's very competitive there. And in many ways, I would say, rather even at some points, sort of laissez-faire capitalism in contrast to what I have previously seen in Germany. So that might be news to some of the listeners, or maybe that's not fitting the stereotype that many have about China, in terms of that they think everything is dictated by the state and the big government, whereas in fact, as an entrepreneur, you have lots of freedoms actually, and it's quite capitalistic in the way how you can act and how fast you can be and how you can execute on some of the business opportunities. But then the point he makes here is, in the end, you always need to worry or think through what will the government, also as the most important market player here in China, think about what you're doing, because ultimately they will come in and regulate if there is excess, if there is something wrong going on, and well, in their views, wrongly going on. And so this has a special flavor, I think, which may be particularly to US American investors hard to understand, because this sort of state intervention, of course, is being viewed negatively. And so Dalio, he has this understanding that, well, of course, there is the big government in China, and well, nobody can kind of ignore this in a sense, and need to know that they have this kind of subordinate place in the system. And if they don't adjust to this reality, then they will suffer the consequences for their mistakes. For example, they cannot make the mistake of thinking, because they are rich, that they have the power for determining how things will go. And that's also what happened, for instance, with Jack Ma. And to comment on that, I think this is where lots of the ambiguity in China is coming from. For instance, also myself as an entrepreneur in China, I knew always that I need to get compliant with the rules and laws in China, because otherwise there will be a point at which the law will be enforced, and it is really a bad idea to be not compliant in China and not be playing by the rules there. He goes on and makes some more interesting and important points. So here, another one is in this paragraph that he says that actually the Chinese regulators are moving so fast in some ways that they are on the go trying to figure out what are the appropriate regulations, and things can change so fast that there can be lots of confusion. And sometimes this is interpreted as anti-capitalist movements once again, whereas in fact sometimes even the regulatory bodies don't really know what they are causing, for instance, in turmoil in the capital markets. And I can fully agree to that. I think this is also what makes the Chinese economy strong in terms of from the innovation side, that sometimes they do just trial and error. They go out there, they build things, they iterate quickly on stuff, but sometimes they make mistakes and need to change quickly and so on. And even the government is sometimes working in the same manner and fashion, and that actually doesn't align well with, for instance, our Western institutions, where processes take 5 to 10 years in order to get something up and going and so on, whereas in China it can be adopting much quicker to a new reality, and then thereby, in the case here, for instance, with the educational stocks, it's sending shockwaves into the systems because it's just going so ad hoc. And also another view that I have is that I think most of those regulatory bodies are maybe not the most professional institutions on a world stage yet. So for them, it's also new to deal with international capital markets. You need to know that 30 years ago, China was basically an agricultural country, right? So don't expect that they have lots of legacy and experience that we have in the West of building up such kind of capital markets and institutions. And thereby, yes, lots of the stuff is still being invented on the go, also when it comes to how governments and government bodies are actually working in China. So that can be quite confusing. And also, frankly, I have to say, this can be also super bureaucratic. It can be super annoying as an entrepreneur. And in general, I'm also not a fan of that, to be honest. And this comes actually together with a news that we have released today, that the Chinese securities watchdog seeks a closer cooperation with the US. So on Friday, we had the news that the SEC now requires new listings that they disclose, for instance, where the companies may face regulatory issues before filing for an IPO. And for instance, also Chinese issuers need to disclose whether or not they were denied permission from Chinese authorities to list on the US exchanges. And now, so the Chinese Securities Regulatory Commission comes back in a statement here and says that the two sides should actually uphold the spirit of mutual respect and strengthen the communications on regulating China-related stocks. Generally, the CSRC is open to the companies choosing where they go public, and China's basic national policy of advancing reform is still up and going, and the financial opening of the outside world will continue. So basically, this statement clearly shows that they want to cooperate, and somehow they are also giving in here and basically saying and acknowledging that they have been causing the trouble there and that they need to have a better communication going forward. Another really important paragraph of the Ray Dalio piece here is around that he sees that there is a global geopolitical environment changing, and you can see that first of all by the US policy shifts and, for instance, about the Chinese companies' listings in the United States, and also the threats to prohibit American pension funds from investing in China. So he also starts to explain the other side. Clearly, this whole US China thing is also being affected by not only what's going on in China and not only about the Chinese stocks listing in general, but overall geopolitical dependencies, and also what's going on with the US-China trade war, for instance, and also, of course, with this political movement between whether or not China is the enemy or if both countries can actually find a way of cooperating and dealing with each other. So his views going forward is that he thinks things like that will happen in the future again, and so one should invest accordingly. So he's basically saying, like, you need to manage your risk, similar to what I mentioned in my previous risk management video here about investing in China. And then at the same time, he also makes the view once again that, and I think that's a nice closing, that both the American as well as the Chinese systems and markets have their opportunities and risks and are likely to compete with each other and diversify each other. And so ultimately, you should have both in your portfolio, because it's just from a portfolio balancing perspective, you will be missing out if you're not invested in China. On the other hand, also if you're not invested in the US, that doesn't make sense. And so in the end, he kind of calls here for a more balanced and more sound approach towards investing both in China as well as in the US, and how to interpret all that have been going on in the past weeks. He also criticizes the Chinese policymakers for how they are publicly communicating, so that one feeds back in the problem that I just described before. But generally, I could say that, well, this take by Dalio shows that, yes, he has a deep understanding of China. You can clearly see how he manages to weigh in the most important aspects of investing in China. What are the obstacles, the risks and hurdles, but also what are the opportunities, and what of this general talk out there right now is actually justified, and in which aspects actually it doesn't make so much sense, and where we should have a more maybe rational view on that. So given his persona and the weight of his fund and so on, I would say that this should have a good impact on the investment community in general. But for instance, also the comment section here below this LinkedIn article is also having quite a bit of criticism of his take here. And the criticism is obviously mostly coming from US investors. So for instance, that one is calling him that this is a naive analysis. And I think in general, this topic really also divides people in either those who think China is still investable because well, we can have a more educated look at things and have a deeper understanding and actually ask for the nuances of it. And then those, on the other hand, which are basically saying, well, the next step is probably that Xi Jinping is going to invade Taiwan, and this is just a prelude to that. And so, well, ultimately, you need to make up your mind in which camp you're in. Obviously, I am also in the camp with Ray Dalio here, that I'm bullish on this opportunity. Although, of course, we always have to think critically, and but I think most of the points that he has described there are really valid, and so I can agree to many of these things, and still I will dive deeper in also more of these aspects, for instance, all of the saga around Jack Ma, and trying to explain more what has happened there. Also giving you more of my views around the role of government in China, and maybe also around, let's say, the ethics of investing in China. So I hope you enjoy that. Please subscribe to the channel. Please also hit the bell button so you get a notification whenever I post a new video. And then also finally, if you like this, please smash a like, that helps the algorithm. And then enjoy the rest of your weekend.